It is a great day to have our next guest on set with us. Joining us right now to talk about the markets, earnings, the new U.S. credit downgrade, and a whole lot of companies is Mario Gabelli. He is the chairman and CEO of GAMCO Investors. And Mario, welcome. It's been a long time since you've been in the studio.
It's been over 3.5 years, and I feel like that Tom Hanks movie in Castaway coming back. So good to see you all.
It's great to see you.
You're Wilson.
I'm you too. I'll take it. I'm happy to be Wilson.
All right. So, Mario, we'll talk briefly about the debt downgrade today, just because it's out there. But I really want to spend most of our time talking bottoms-up stuff with you. What do you think about this?
Well, look, the answer is what is the amount of money that we owe as a country, $33 trillion? Mm-hmm. How much of it is held by the public? How do you pay interest if it goes to 4 and 10?
Interest rates soaring, right.
And then you have to look at it, how do we get out of this mess? And the way you get out of it is have a strong economy, that is grow revenues, cut costs or keep them constant, and that's it.
And a functioning government that can come up with a plan to do
right. You got to have, look, the Powell is doing part A to try to reduce aggregate demand by keeping rates higher, longer, and he's got the rhetoric, the 4 R's that I talk about. Then we have policies that are very helpful long-term, like the Infrastructure Act, the IRA Act, the IIJA Act, the CHIPS Act. But the answer is you got to re-examine what are the priorities and expenses. So we'll live with it.
You are a little concerned, I think, about the banking industry, maybe the shadow banking industry. Talk about that. Well,
part of it is what is called an accounting rule that came in after the collapse of 1990. When 1,000 of the 3,000 S&Ls collapsed, they put in an accounting rule, FASB 155, and it's now 157, which means you could put assets to hold to a 10-year maturity, and as long as they are more or less okay, you don't have to write them off. So the HTM continues to be hold to maturity for assets like buildings, office buildings, commercial buildings, real estate, and you just heard about the whole kind of things like malls. And so owners are turning them in, and that causes you to have a mark-to-market. Now, which companies are doing well and which aren't? So it's not one. And then there's shadow banking, and you're going to have someone in at 2 o'clock today and talk about private credit. They're unregulated. Unregulated means that you could have some explosions.
Meaning explosions more than hiccups, things that could change the equity markets overall, the perspective on things? Because, again, you're usually looking bottoms up.
Look, I've been through so many crises, 1893, 1907, 1919, come on, 1929, New York.
You've read about those.
Since you guys have been on CNN, CNBC from the predecessors, we've had 89, had so many of them. We will have a challenge, but J&J Bank will do well. Jamie Dimon and James Gorman.
Yeah, okay.
But so there'll be winners, and just allow the free market to function.
I guess the bigger question is, would there be something that's big enough to turn around the market's momentum? Because at this point, there is a serious momentum move. Dow's been up 16 out of 17 sessions.
Well, trees don't grow to the sky. I got it.
You've looked at some huge, like if you look at the NASDAQ for a year to date, 37+%.
So you have a rest in the market. Markets go up, markets go down. We want to buy good companies with good management or good valuations. And to the degree the market comes down, to the degree that the Magnificent Seven are in the trillions, there are opportunities for small companies. In addition to that, we believe corporate lovemaking, M&A, even with the Federal Trade Commission doing what they've been doing.
Okay, this is interesting because you've been a long believer in M&A activity, but it's gotten to be a freeze because of what this administration.
Well, yesterday, for example, or 2 days ago, Chinook, symbol Kyndryl just closed. No Hart-Scott-Rodino second request. Aerojet General, despite all the mayhem, closed. L. Harris is a well-managed company, and the stock is a bargain. And that closed, and several others are in the pipeline. We'll see. Notwithstanding that, common sense also has to prevail. The FTC and the Department of Justice are coming out with new rules. But there's a world out there. Companies like today, Ituchu in Japan is buying in the minority interest. That's part of the M&A. They own 61%. They're buying the balance. So you're seeing a lot of that. And then there's a lot of dry powder with the private equity, with corporate strategics. And then you have financial engineering, the reverse of that, with J&J, for example, spinning off Kenvue and doing that kind of dynamic. So there's a lot going on.
What about the media stocks? You've long been an owner of media stocks. If you look at Paramount, if you look at Warner Brothers, first of all, what are your positions there, and does it take a deal to make those things make more
there's a lot of A's in the world that I like. I'll go over some, like ag, like advertising will be one, aerospace. And the aerospace industry, defense, commercial aviation is extraordinarily exciting. But on advertising, everybody should contribute to their favorite politician. Why?
Why?
Because budgets for advertising in 2024 are going to be $14 billion, up from $2.5 billion from the political world. So the TV stations are getting their share. So as a result of that, I like those kind of companies, even though they're linear television, even though they're kind of dated. Secondly,
CBS, ABC, NBC.
Well, there are. I'll give you an example. There's a company called Tegna, TGNA. The stock has 200 million shares, probably 197. The stock closed yesterday or today around 16.50. They will earn $3.50 a share. They had a deal to be bought at 24. The Federal Communications Commission kind of derailed it in a very interesting way, not important at the moment. They're going to be $24. You're going to make 50% in 18 months. In addition to that, at some point, the FCC is going to allow TV station operators to have more than 39% coverage. What does that mean? It means that companies like Paramount, companies like Disney may examine keeping the network, like keeping ABC network, Comcast keeping its network.
Contrary to what Bob Iger just talked about.
Yeah, and then selling and spinning off the TV stations, assuming either as a public company or someone can consolidate that. So, those are the dynamics right now.
Do you think that's going to happen under this administration? No. And do you bet on a new administration?
No, you don't have to bet on it, Andrew. Even if it doesn't happen, it's okay. But why would you care about when somebody can get on TikTok and have 385 million viewers? And they worry about somebody having a cap of 39%.
Oh, I don't disagree with you. No, you and I are in the same place. I think actually right now the regulatory environment around media companies doesn't make a lot of sense, given how much competition there actually is. But here we are.
I agree, but I'm not talking about today. I'm talking about it's only 15 months till we're looking at 2026. Well, 15 months from now, we're already in 2025. And then we'll look out a year, and you'll have a new, hopefully somebody else doing things that are of a regulatory nature that are more practical.